Scott Taylor with SanDiegoRealEstateHunter.com, licensed in the state of California for both real estate and mortgages with an emphasis on San Diego. Now, you filled out an online form regarding the FHA Streamline Refinance, and that's what this educational video is all about. Now, I broke down what an FHA Streamline Refinance was, so watch that video. And this is kind of more of a Q&A from people that watch that video and have some questions for me. You might have the same questions, so I just wanted to shoot one more video. So one of the questions is, how soon can I do an FHA Streamline Refinance? Which is a great question. A lot of people get an FHA mortgage and then they get maybe for a little bit higher rate. Maybe they did an FHA 203K, which is a construction. Maybe the rates were just higher. Maybe there's another reason. So how soon can they do it? 6 consecutive payments, okay? At least 210 days have to pass. So that's it. One of those, both of those things have to happen. 6 consecutive payments, 210 days have passed since the date of your last closing to the day that you submit with me, okay? And in actuality, it's better to refi as soon as possible when you can and have that 5% net tangible benefit, because you get a portion of your UFMIP, upfront mortgage insurance premium, refunded back to you. And as soon as you do it, you get more. And then you have 3 years where each month is less and less and less, to the point where you don't get any refund at all. So how can we make it a no cost refi to me? So there's really 2 ways that you can pay closing costs for your FHA Streamline Refinance. One, you can pay closing costs out of pocket, means from your bank account, from your under your mattress, whatever. The other one is called a no-cost refinance, right? You always hear about this, oh, it's no cost. Guess what? There's always costs in every single mortgage loan. It depends on how you structure it. So we're gonna do what's called a lender rebate. Very simplified. Let's assume that we can qualify you at 4%. We would then do it at 4.25%. That 0.25% on the back end will have some money there. That money would pay your closing cost. And that's how it is, very simplified. So always keep in mind, no cost doesn't mean you actually don't pay it. It's just how we actually structure it. So what's the process and how long does it take with you? So the process is very, very simple. You can apply online in 20 minutes. I pull your credit, and then I send you a list of the needed supporting documents that we're gonna need. As soon as you upload it or send it to me via email, we're off to the races. Within 24 hours, we open escrow, we submit it to the lender, and we can close in very quickly, certainly less than 21 days, and often around that 15-day mark or so. So we can do it very, very quickly. So why use you versus my current lender or major bank? That's a great question. So I work for a mortgage broker. So I'm in between you, the borrower, there's me, and then we have wholesale lenders. So we're approved with a lot of them through the state of California, and we can take your loan to any one of those lenders, right? Sometimes they have better FHA rates. Sometimes they have discounts for this month. Sometimes they have less fees for this month, etc. So once that comes in, we shop, my team shops who's the best lender at that time, and we submit. The difference is if you walk into a credit union or bank, you just get their loan products at their rates, just that one place. So you'd have to shop each one if you wanted to, or come to someone like me. The other benefit or difference is, don't forget, you're walking in and your retail at my end is called wholesale, so it's much better. And then how do I know if it makes sense, right? So we know that you have to have at least, all the criteria. 6 consecutive payments, 210 days have passed, current on your mortgage, only 130 day in 12 months, and then the 5% net tangible benefit, right? So we know that all of those you have to meet. So I would say, and this is rates change a little bit all the time, depending when you're watching this, it might be up a little bit, might be down a little bit, it might be the same, right? I would say, as you're watching this, if your interest rate is anything around a 4.5% or higher, you should at least fill out that application, and I should at least run your credit to check and see what rates are at that time. Awesome. That's all the time that we have. Thank you so much for watching. Once again, go to scottsloanapp.com, apply online in 20 minutes. I will pull your credit, and then we'll be off to the races. Thank you so much for watching, and I look forward to doing your mortgage loan very soon.